Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. One of the most important things to understand about precious metals is the gold to silver ratio. What this means, how to check the ratios and see which is the better investment at that period of time. Sometimes gold is the better buy, sometimes silver is the better buy. But overall, silver is fundamentally the more undervalued asset because the ratio is still extremely high. Over the course of history, the ratio has been around 50 to 1. Back earlier, it was around 40 to 1 in the early 1900s, and for a quote-unquote ratio to be high, it has to be above 50 to 1. Right now, the ratio is about 85 to 1, which means it takes 85 ounces of silver to equal 1 ounce of gold. But that's an extremely high ratio because silver is not much more common than gold is. It comes out of the ground roughly 8 to 1. So why is the ratio so high? This is something that we have ourselves fundamentally, or I guess exaggerated, since gold is the royal metal, since people want gold and it's shiny and it looks good and it's the metal of kings, and over time that's something that people put a stigma on. But really, in the everyday world, as it's used in its intrinsic value, it's not much more common than gold is. Gold is not much more rare than silver is. So anyways, I found this little article. Actually, this was sent to me from my friend, and he told me to check this out because it is cool. It goes over the history of it and really will, hopefully by the end of this video, show you where the gold to silver ratio is, and then later on in the video I'm going to tell you how you can use the ratios to your advantage to either see which metal is the better investment. So the gold to silver ratio represents the number of ounces of silver it would take to purchase 1 ounce of gold. For example, if gold was trading at $950 an ounce and silver was priced at $12.50, the ratio would be 76. So that's right there should show you, even if gold does go back down and silver goes with it, if they correlate it to each other, the ratios still are pretty high. For a ratio to be, 40 to 1, silver would have to appreciate a lot higher than gold and outperform gold. So anyways, according to the latest gold to silver ratio charts, the amount of silver needed to buy an ounce of gold is at 84. Steadily rising from the 10-year high of 82 in 2018. And honestly, the ratio was around 95 to 1 a couple months ago, and that was extremely high. That meant that gold was actually more profitable and outperforming silver at the time. So anyways, the gold per ounce is currently fluctuating between $1,270 and $1,270 to $1,270, while silver is $15 an ounce. Now, obviously, this article is a little outdated. Right now, gold is at $1,500 basically, and silver's at $17.50, but the ratio is still around 85 to 1. So the logic is that when the ratio is wider, silver is undervalued, and when the ratio is narrower, then gold is undervalued. This is a rough approximation, but investors still use it as a jigsaw data, combining it with factors such as demand and amount mined. And I want to make a side note off this, because also not only the demand, not only the surplus, not only the production, but also now we're also factoring in the economy, the political views of it, whether there's economic insecurity, whether it's the US-China trade wars, the chart analysis. So we're learning how to incorporate many different things and many different factors into the world of precious metals to give an educated guess on where prices are at. But I thought that was cool that they did mention that. Anyway, so the typical range of gold to silver is between 50 to 70. The ratio is sitting comfortably around the 80 mark, suggests time could be right now to buy silver. And the ratio's been steadily above 80 to 1 for a very long time, so silver is definitely still the better buy. Silver has more opportunity to appreciate than gold. If the ratio goes back, goes 95 to 1, then gold would be the better buy, because that means that silver is, obviously, if the ratio is like 30, 40 to 1, that means that silver has already appreciated, which means that gold most likely would appreciate for the ratio to go back higher. So I'm going to not only share this article, but I'm going to share some of the history before I go into this BBP news. So throughout the history, the ratio has fluctuated widely. So in 1991, the ratio peaked at 100, which, yes, that's really high, but not even a couple months ago, the ratio was 95 to 1. So you have to remember that, yes, historically, the 100 to 1 is crazy. 100 ounces of silver to equal 1 ounce of gold, but it almost was that a couple months ago. So it shows you the patterns. History repeats itself. At the peak of the last precious metals boom in 1980, the ratio had narrowed to 17 to 1. So you can see how big of a fluctuating price or gap this really can be. And at the end of the 19th century, the ratio was fixed at 15. During the Roman Empire, the ratio was fixed at 12. So they had fixed prices, almost like a natural price for these. So 323 BC, time of Alexander the Great's death, the ratio stood at 12.5. So you can see at earlier dates, the ratios were much smaller. People saw silver a lot more valuable than they do today. And this is something that we as a society kind of just put on it. Many investors believe the ratio should still stand at 16 to 1, which is definitely true. If gold's going to be $3,000, then silver has to be, at least, $80, $90. I mean, it's not something that's even, put on your tinfoil hat. It's not a conspiracy. It's just how we're looking at it in the everyday market, in the everyday world, what silver is used for, how many benefits it has, in the industrial uses, the technological era we're advancing in. It just makes sense. So many investors believe the ratio is still 16 to 1, primarily because there's 16 times more silver in the Earth's crust than gold. Many argue that the ratio could fall further because only 9 times more silver is currently being mined globally than gold, and actually this is lower now. The top 3 silver producers, Mexico, Peru, and Chile, have been abandoning silver mines and have been focusing on gold, so actually gold is being dug out more commonly than silver is. Others point to make the fact that there's 160,000 tons of gold above ground, while most silver ever mined has been used up in industrial processes, which is true because when silver is used in technology for these tech firms and the laptops, the cell phones, it's being lost. It's not being recovered. A lot of gold is used for jewelry, used for coins, used for bars, used for necklaces, earrings, rings, stuff like that. So it gets recycled, it gets remelted, reused. But silver is used up in technology and people aren't recycling it. So a lot of silver is being lost, so the ratio is actually much smaller. So it's just something to think about. So this other article is talking about is now the best time to buy silver in 10 years. And this was written on March of 2018. So this is an interesting perspective to look at because you can see last year where silver was, and you can see trying to correlate or to see where they were talking about. Now they go off to say, how silver was $50 in 2011, which a lot of people forget about, but so with the price per ounce for the precious metals dropping steadily over time, we could about to experience an immediate breakout from this trend. And this is, I don't think silver went much higher after this, but this year actually was when it was the highest I've seen in a while, when it was $19.50. So there, you can see how they use the gold to silver ratio charts to incorporate prices and see where they're headed. And I wanted to show this as an example because it really is a great opportunity. If you can break down the gold to silver ratio and you can use it to your advantage, or trade your gold to silver or silver to gold, you can earn free gold and silver without taking a penny out of your pocket. So we can go on to say right here, it shows the gold to silver ratio chart. In layman's terms, the gold to silver ratio is amount of silver ounce takes per amount. We already know that. So right here, the chart shows the volume of silver being traded to rise late 2014. A brief spike in 2016 has been consistent. The ties with this are that we already know from the mainstream news. The year-on-year demand for silver industry is rising, while investors have been putting their money elsewhere. The move towards the electric vehicles and photovoltaic applications, solar panels, for example, means the silver as an electrical conductor is greater than ever. The Silver Institute reported that in demand in 2017, 92 million ounces were from industrial uses. So I thought that was pretty cool to show that even with the gold to silver ratio, people still are understanding, people are talking about it as well. People are starting to understand, especially with all the EVs, electric vehicles that are coming out, the way the world is. We actually just found a way to make silver 40% stronger without losing any of its electrical conductivity. So I'm sure that's going to play a huge role in the industrial world, making demand even higher, not only from, investors like you and I, but also from the big business, from the companies that are building these gadgets, these electronics. So I'll post a link to this article. I wanted to share this kind of with you guys because I thought this was a pretty cool article as well. Both of these links will be in the description if you want to check them out yourselves. I highly recommend it. I went over the first article because it was fairly short, but the second article I highly recommend checking out. Just reading, it's pretty cool. It talks about the gold to silver ratio, talks about how it's incorporated. But to make this video not too long, I'll just sum it up here. But I do appreciate you guys for tuning in. If you did enjoy this video, make sure to smash that like button, subscribe if you're new, because I do post daily videos. If you want to be updated on a daily basis what's happening in the world of precious metals, this is your channel to subscribe to. That it's definitely important to do that because you want to be informed on a day-to-day basis on what's going on, what's the latest news, what are these prices meaning, where I think prices are headed, and I will do that for you guys. So anyways, thank you guys for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.